Despite a historic rally in precious metals, the cryptocurrency market has been sliding for a month. That decline accelerated sharply on last Friday in what the market is calling the washout, a reaction to the nomination of a hawkish Fed chair. The sell-off extended through this week, with Bitcoin dropping another 20% to sink below $70,000. 10 years ago, I was a strong Bitcoin believer. I hoped this decentralized technology would curb central government's abuse of fiat money and usher in a more democratic financial system. However, looking at the market today, where gold hits record highs of $5,500 while Bitcoin crashes, I have stopped believing in that utopian fairy tale. Why? As a financial professional, I had to step back and ask some fundamental questions. 1. Is Bitcoin a currency? To function as a currency, it requires either government backing or long history of unchallenged consensus. Bitcoin has neither. The thesis of Bitcoin as digital gold is dead. On the consensus front, I would admit that among all cryptocurrencies, Bitcoin has the broadest consensus. As such, the consensus has pushed its price to its high of $120,000. But this consensus is fragile and driven by liquidity, not safety. The events of 2026 have proven that Bitcoin is not a safe haven like gold. It is a liquidity sponge. When geopolitical fear rises, capital flees to real gold and flees from Bitcoin. 2. Can Bitcoin become a currency? While the US regulatory environment seems friendly, it is a trap. The Congress passed the Genius Act last year, but not to empower Bitcoin. The act was designed to regulate stablecoins. The government has effectively captured the on-ramps to crypto. By sterilizing stablecoins, they have ensured the US dollar remains the underlying settlement layer. Furthermore, a deflationary asset capped at 21 million coins, largely hoarded by early adopters, is fundamentally ill-suited to facilitate economic growth in a modern society. 3. Is Bitcoin an asset? By definition, an asset must hold intrinsic value and provide utility. An apple provides nutrition, a house provides shelter. What utility does Bitcoin provide? It yields nothing. In a high-interest rate environment, holding a non-yielding asset is expensive. You are entirely dependent on a greater fool buying it at a higher price. Technologically, Bitcoin is obsolete. A Model T trying to drive on a modern highway. It consumes vast energy to secure a network that is too slow and expensive for daily finance. While blockchain technology does have promise, networks like Solana or Ethereum are vastly superior for actual transaction utility. Bitcoin refuses to evolve, risking a death spiral where miners leave as block rewards vanish. 4. The illusion of democracy. Finally, does Bitcoin actually bring a more democratic system? On the surface, freedom from government interference sounds democratic, but in reality, the absence of regulation has created an oligarchy. Bitcoin ownership is more concentrated than the fiat wealth it sought to replace. A small cartel of whales and early adopters manipulate the market at will, pumping prices to lure in retail investors and then dumping on them. In a world without a democratic government to represent the majority, the few have absolute power to manipulate the system. The final threat, quantum computing. Beyond the economics, there is an existential tech risk. Quantum computing is developing faster than the market expects. Once we reach a ChatGPT moment for quantum technology, the encryption shielding Bitcoin could be deciphered in seconds. At that point, the ledger isn't just valueless, it is broken. Between the washout, the regulatory capture, and the quantum threat, the argument for Bitcoin has crumbled. It was a brilliant experiment, but it is not the future.